Let's take it forward to Rashesh Shah from Edelweiss and try and understand what he's expecting from the budget this time. Rashesh?
I think the first and foremost would be increased spending on rural infrastructure and rural social programs, because I think in the last few years we have seen a slowdown in the rural sector, which has affected consumption and overall economy also. So the finance minister should definitely increase spending on rural infrastructure, rural social programs, and just make sure that the farm incomes go up, the rural income go up, which can lead to consumption and can give a big boost to the economy.
What about corporate tax? I mean, nobody wants to pay more taxes. I'm sure everyone is gunning for a lower, tax rates. And now the classic example, which everyone seems to be quoting, is that if US administration has got rates down, we need to bring taxes down here as well.
We are all hoping that the finance minister does cut corporate tax rate as was promised by him a few years ago. Also, if you see all over the world, starting with the US, corporate tax rates have been cut. And for India to remain competitive, for India to keep on attracting more and more FDI, we also have to bring our corporate tax rate in line with global standards. So we are hoping that, as Mr. Jaitley had promised, from 30% to 25%, even if we can't do the entire 25 in one single shot, we are hoping that from 30 he brings it down to at least 27.5 in stage 1, with a promise to go to 25 in stage 2.
But what about the expenditure side, Rashesh? What is it that you're expecting? What's the street expecting from the budget?
The third one is, see, government needs to spend. I think this is the year economy is coming back, but still the private sector investments are not back on track. So we need for the government to spend. In order to spend, they should not raise more taxes. In fact, ideally they should tinker as little as possible with the taxes. But the other instrument government has is what we call the non-tax revenues. Through disinvestment, through asset monetization, government has a lot of side pockets which now it can use strategically. In the past, governments have used the non-tax revenue more as an ad hoc mechanism. Now I think the opportunity this year is to start using it as a strategic tool, and historically the non-tax revenues have been 22 to 24% of total government revenues. We think it can go up to 30 and eventually can be also 40% of total government revenues. So let's use assets, let's use government property and others to really monetize, raise money and invest for social programs, for infrastructure, for healthcare, for everything that the government needs to spend, and really spur the economy forward.
Rashesh, brilliantly articulated. Thank you very much.